Good afternoon, traders and investors. Will back here with another one, coming to you with a weekly market recap. Hopefully all you guys are having a good start to the weekend so far. And in Friday's markets, guys, well, the volatility simply continues. It was a wild day, which started off bright red in the markets after a non-farm payrolls report came out and showed that there was less job openings in the economy that people had expected. Thereafter, midway through the day, we had a speech from Jerome Powell speaking at a conference. And Jerome Powell told us that despite the recent volatility due to the Trump administration policies, that he was still very confident in the direction of the economy. But Friday was definitely a very wild day. From top to bottom and bottom to top, we are talking about a 3% up and down swing across the indexes. So the volatility might just be here to stay. But are we approaching a potential local bottom of the recent sell-off of the last 3 weeks? That's what we're going to take a look at in today's video. So as a matter of fact, today we got a lot of things to talk about. Number one, we're going to be going over AVGO Broadcom earnings. They had earnings last Thursday. I promised you guys I would do a recap, so we will tackle that first. Number two, we're going to be going over that speech by Jerome Powell and see exactly what the the Fed chair had to say about these markets overall. Thereafter, guys, we're going to get into our main technical analysis portion of the video, going over the SPY, the QQQ, and all of our minor indexes as well. See how the rotation is shaping up leading into a new week of trade next week. Thereafter, take a look at our major big tech names, see which of these big tech names are currently in very decent levels and possibly attractive to buy right now. And then lastly, guys, I haven't done one of these in a while, but I'll be going over my top stocks to buy right now amidst the sell-off, amidst the correction. And you'll see there's a lot of stocks from many different industries, from growth to value. These are the best possible opportunities that I was able to find in the current markets. There will definitely be something for everyone, so make sure you stick around to the end for that list. And that's pretty much it, guys. At the end, we'll be doing a quick portfolio recap for all the trades that I currently have into next week as well. So we got a lot to talk about today, guys. Let's jump right into it, shall we? So on the Friday session, the SPY was up 0.56% after starting off the day bright red. The QQQ's coming back roaring as well, 0.74% to the upside, which leaves us with a heat map that looked like this. Despite declines in Walmart and Costco after their earnings, and some big declines in Eli Lilly, overall, the heat map was not that bad. Mixed moves in big tech, mixed moves across financials and healthcare alike, but the defensive side of the market, the more value-oriented side of the market, did do quite well. So we had some nice rotation coming into the market. Is it short covering, or is it possibly the start of a little bit of a rally after 3 consecutive weeks of sell-off? Well, that's what we're going to analyze today. In terms of the one-day relative performance, you can see that we did have some very nice bright green names, or bright green sectors rather, more in tune to the defensive and value-oriented side of the market. Consumer defensives, financials, and cyclicals, however, to the downside. And despite that 1 day's worth of green, guys, of course, we are still big red on the week and big red on the 1 month. Only a few key sectors making it out alive: basic materials, and on the 1 month relative, consumer defensives and real estate. Everything else pretty much in the red, and undoing a lot of the last 3 months worth of performance across all indexes as well. So the sell-off / correction has definitely been felt in the market. However, I do still think there are some fantastic buying opportunities if you have a long-term portfolio outlook, or even possibly for some short duration swing trades for a little bit of a bounce in the markets. So before we get into more technicals, guys, let us dive right into the Federal Reserve meetings let's start it off with AVGO earnings, because I'm pretty sure it's fresh on everybody's mind, right? So we're going to take a look at AVGO, then do Jerome Powell, then get into our technical analysis. So AVGO Broadcom coming with their earnings last week. Now, after hours, they were up 16% after their earnings, but gave a lot of that back. If I throw on the extended hours, you'll see that move even better, right? Into the early morning of Friday, they pretty much gave back all of the gains before bouncing a little bit in the afternoon, ending the day with a nice 8.64% move to the upside, reacting nicely as well from the 200-day moving average and this support box that I've labeled, which was your previous all-time highs before this move up here. So nice little breakout and then retest of a very major level, the 50 weekly EMA there as well. So what happened in Broadcom's earnings for them to have such a nice pop? Well, they absolutely crushed it, guys. EPS crushed by 6.12%, revenue beat by about 2%, and they did have very good guidance for the upcoming quarter. Broadcom shares soared 16% as earnings top estimates on demand for custom AI chips. Now, what we've been talking about, guys, in the market lately is that there's really a bifurcation in the semiconductor trade. You have three names that are largely doing better than the rest in terms of NVIDIA, not so much as of recently, but NVIDIA, Broadcom, and TSM. Now, all of those names have come down, but several other names have come down even more. The bifurcation in the market is between the infrastructure ramp plays. TSM, NVIDIA, and Broadcom are the leaders of those. And then you have all the other plays that are associated more with consumer electronics and automakers alike. You can think of names like onsemi, MCHP. You can think of names of Texas Instruments, names like Qualcomm as well. Anything that's exposed too much to consumer electronics in terms of semiconductors, even to a certain extent, Micron, have fallen a lot more than the infrastructure plays overall. The infrastructure plays, Broadcom, NVIDIA, and TSM, have largely held up better than the rest of the pack of semiconductors. So let's take a look at the rest of their earnings, shall we? Moving on further, they topped analyst expectations, and the chipmaker offered strong guidance for the current quarter. $14.9 billion in the second quarter revenue, higher than the estimate of 14.76, so double beat there. Revenue in the last quarter rose 25%. They also concluded their annual revenue posting as well, and their revenue was up 44%, guys, from 2023 through 2024, definitely ramping it up. And Broadcom is no stranger to ramping that revenue amidst the infrastructure build. You can take a look at their EPS ramp for the next 3 years, and the revenue for the next 3 years as well is quite impressive, especially as measuring or when measuring against the last roughly 5-6 years of data on that stock. Moving on further, their net income increased to $5.5 billion. That is 36.8% net margins. That is fantastic. That's roughly in line with the top end of what Broadcom has been able to deliver over the last 1 year of trade. The company is one of the primary data center infrastructure vendors for AI, working both on Google's custom AI chips, as well as providing essential components for networking thousands of other chips together to develop advanced AI software. Broadcom said it recorded $4.1 billion in AI revenue during the first quarter, which is 77% higher on a year-over-year basis. So this is definitely one of the major revenue drivers for the company right now, but there's no secret there. The CEO said in a statement that the company expects continued strength in AI semiconductor revenue. Of course, he would say that. TSM said that. NVIDIA said that as well, reaching a projected $4.4 billion in the second quarter. So that is another almost 8 to 10% jump from this quarter that just passed. In December, Broadcom said it was developing custom AI chips with 3 large cloud customers. Now, no secret there, it's Google, Microsoft, and Meta. Tan said on Thursday that in addition to those customers, the company had deeply engaged with 2 other hyperscalers and is working with 4 other potential customers to develop their own custom AI chips. So all in all, very bullish earnings from Broadcom, saying demand was still very strong. Here you can see that massive jump in revenue, 44% year over year, investing heavily in the company in terms of R&D. They need to, and Broadcom has over 21,000 patents. They don't only do AI software. They have 2 lines of businesses here. Infrastructure software, which is the AI play, and then they have semiconductor solutions, which really goes into the networking, server storage, broadband, wireless, industrial applications, right? So 2 very strong components of the business overall. If you take a look at the net revenue, here is the massive leaps and bounds that we've seen the last 5 quarters. Gross margins are also expanding, which goes to show that their cost of goods sold is not ballooning as they scale the business. Very solid, and increasing free cash flow ever so slightly on a year-over-year basis, and also growing that common stock dividend and doing a lot of buybacks in between. So overall, guys, the picture for Broadcom is very good. If I had to give one tiny little red flag about the company, it is definitely in their balance sheet, right? We know that they spent a ton of money acquiring VMware to the tune of like $48-50 billion, which added a lot of debt to the corporate structure right here. They have been paying down this debt, this red bar right here, over the last 5 quarters, but that is the one red flag that leads me to give this balance sheet, guys. It is no longer an A balance sheet for me. It has to be like a B plus or a B grade balance sheet. That's the only problem that the company has. They're generating a lot of free cash flow, but the problem is when you have a lot of debt, obviously you're going to want to service that debt before doing more buybacks or before increasing the dividend by a substantial amount. That's the only thing that we have there with this fantastic company. So in terms of valuation, where does the company stand right now? At about 195. Company is now down, well, was down to the peak of last week's drawdown, 27%, currently still sits at around 22.5% drawdown from the all-time highs. at 195. You're sitting at a 29.7 forward price to earnings ratio for 2025. When we divide that by their EPS growth rate, which is a fantastic 22% per year, you get a PEG ratio of 1.35. Anything below 1 is good. Between 1 and 2 is okay. Above 2 starts to get a little bit rich as we price in future growth. So at 1.35, I would say that this is very good. Free cash flow yield is a little bit soft at 2.2%, but still good since they're increasing that free cash flow every single year. Now, in terms of this one for a long-term portfolio, personally, guys, I prefer TSM. It just has a bit better valuation in terms of a PEG. You're paying less for forward growth with arguably equally as strong revenue and EPS growth, and the free cash flow yield for TSM is also a little bit better. Keeping in mind, though, Broadcom is not bad. It's not my favorite play if I had to compare between the two. Obviously, they don't do the same things, but I really think that TSM is a better picks and shovel company for the long term, and that is just me. But coming out of a trade area right here around the 183, if you do get a revisit down here, looking for a daily uptrend break, you could have a very nice trade opportunity right here, right? Stop loss goes below 177, take profit area is 212 all the way up to 220, and that, even from here, guys, represents a decent risk to reward trade, talking about roughly a 2-to-1, right? Not all that bad, all things considered, right? So overall, guys, not terrible in terms of trade structure, in terms of Broadcom for a potential expansion. Just looking at this point for a monthly higher low for further trend continuation. Although the RSI was overbought, we are now normalized, tapping in to the 12 EMA, which is why I say, if you get a little bit of a retest here, it opens up the door. If you get it down here around the 180 mark, that's what really gives you a much better risk to reward profile here, talking about over a 2-to-1, almost closer to a 3-to-1 trade, if you can really get it in the lower 180s. But all in all, Broadcom, fantastic company. If I had some long-term shares that I acquired all the way back here, I see no reason to sell just yet. And that is all the earnings recap on Broadcom. Hopefully you guys enjoyed that. Now, before we get into the SPY and the QQQ and everything else, let us dive into exactly what Jerome Powell had to say about these markets at the conference over the course of last Friday. So, Fed Chair Powell says he's not worried about the economy and amid Trump's tariff chaos. And chaos is a really good adjective to describe what's been happening as of recently, right? If you guys didn't see my video, by the way, that I put out last Thursday, going over all the catalysts for the current market sell-off, I highly suggest it, guys. I spent about 35 minutes going over every single one of these points in detail. So if you want to see my take and opinion on the matter, you can refer to the last video that I put out. I can even link it down below in the description. However, let's move on to Fed Chair Powell's comments. America is feeling uneasy about the Trump administration's rapid-fire trade policy changes, but Jerome Powell said Friday he's not worried. Despite elevated levels of uncertainty, he said, the U.S. economy continues to be in a good place. He's not wrong, although we did get somewhat soft non-farm payrolls jobs data in terms of missing the expectation from 160K down to 151. It wasn't an absolute disaster. And although we did get an uptick in the unemployment rate from 4 to 4.1, I'll remind you, 4.1 is still amongst the historical lows for the overall market. Take a look here. I'll pull up the chart so you can see it, right? 4.1% is extremely low in the context of the last roughly 15 years worth of data. So he's not wrong in saying we even got GDP last week, and GDP was still about 2.3%. Those are not arguably bad numbers. Can they possibly deteriorate in the future because of the current administration's policies? Yes, they possibly can. And Trump even said that himself on the Friday session, where he said that it may be a little bit bumpy before it gets better overall, right? That I'm obviously paraphrasing, but that was the gist of what was discussed on the Friday session. Now, sentiment readings have not been a good predictor of consumption growth in recent year. Powell obviously talking about the consumer sentiment surveys that have been circulating over the last 2 weeks that show that people were nervous about the direction of the economy in the next 3 to 6 months. We do not need to be in a hurry and are well positioned to wait for greater clarity, said Jerome Powell. The Trump administration's whipsawing on trade policy has sowed uncertainty for America's decision makers, with some businesses noting that it is impacting their ability to operate with confidence and take risks. Completely normal, according to a recent Fed survey of firms across the country. So business leaders might be a little bit skittish in terms of maybe doing big capex projects or maybe going on a big hiring spree amidst economic uncertainty, right? Now, America's souring economic mood comes at a time when the US economy has shown early signs of slowing, but also of stubbornly elevated inflation, a toxic combination sometimes referred to as stagflation. This is true when the economy slows down, but when inflation stays high, the Federal Reserve is at a dangerous place. They cannot cut interest rates too fast and too aggressively in hopes of stimulating the economy when inflation is relatively high, because it has an inverse reaction on inflation, right? If people just use free rates to go and spend all their money, inflation's going to tick back up, and then the Fed is just out of tools to combat any further weakness in the economy or to combat stagnating inflation. Moving on, the question is, how does this all sort out, said Atlanta Fed President Raphael Bostic. I'd be surprised if we got a lot of clarity before the late spring into summer. That's what I said in last videos as well. Powell echoed that sentiment in his Friday speech, saying, we continue to carefully monitor a variety of indicators of household and business spending. The Fed leader said how officials respond to Trump's policies depends on the net effect of these policy changes that will matter for the economy and for the path of monetary policy as well. This is also something that I brought up recently, right? When we started talking about the drawbacks, he is talking about the combination of all policies on the jobs market, on inflation and economic growth, the deportations, the government jobs trim, the corporate tax loosenings, right? And also loosening regulations for US companies, and of course, the tariffs. Jerome Powell is trying to look at this in the context of all of the policies in combination, not only the tariffs altogether. That's what he means when he talks about that. It's not simply what's happening with tariffs. It's what's happening with growth and all the other things as a result of these broad changes in economic policy, not just tariffs, said Powell. So that is pretty much a very big recap of what Powell said. The gist of everything is that he's not yet nervous. He's trying to look at the broader picture of all economic policies together, but he has also admitted that the recent tariff news headlines and the chaotic policy stance shifts are going to lead to a bit of uncertainty in terms of the direction of the economy in the near-term future, talking about the next 3 to 6 months. But they did say that he was confident that the Fed also additionally had the tools to respond in the event that things got a little bit more dire. So that is everything to recap Jerome Powell's comments. Those comments were well taken by the market. You can see he was speaking at roughly 12:30 Eastern. And when he started speaking, the markets then had their bounce, right? So talking about the markets, if we move into our technical analysis portion, well, we're starting to come to potentially a local bottom, reacting off the 200 daily moving average. This is an exponential moving average, an EMA. I know a lot of people like to use the SMA, and if you were to use the SMA, we would be below the 200 SMA, but I like to use the 200 EMA because it puts a lot more emphasis on the more recent data rather than taking the more trailing data overall. So the S&P closing above its 200 EMA overall. However, keep in mind, guys, we do have resistance above us, and my apologies, I'll turn this into a red resistance box so it makes sense, right? Even if we get a little bit of a bounce from here, we're looking on the short-term timeframes. Can we get an hourly trend change? If we can get an hourly trend change into Monday, perfect. Your daily bounce is underway. But the bulls have a lot of work to do, guys. This is two big legs of daily selling down. The lower high is all the way up here at 597. The bulls need to put in at least a 50% retracement to give themselves the best chance of resetting into a daily uptrend. Can they get it done? Well, we have one thing in the way potentially next week, which is going to be on the Wednesday session, guys. CPI. We know a lot of emphasis has been put on inflation and the impact of tariffs on inflation. Now, the impact of tariffs on inflation will not be felt at least for another 3 to 6 months. And that is the analyst and economist consensus. That is not my prediction. That is what people are predicting overall. So CPI report should be coming in at 2.9, which is a slowdown from the 3% read that we got in January. But if this number comes in even a little bit hotter than expected, guys, you know what the market is going to do. They're going to start pricing in the worst possible things in terms of price action. So what may look like a nice bounce into maybe Monday and Tuesday as we react from these sell-off lows and react from the support zone that we clipped into 565, we may get a nice bounce, but if Wednesday CPI is bad, you're just going to set a lower high and possibly revisit the lows one more time. Keeping in mind as well, we are battling against overhead resistance. So I am a firm believer that after 3 weeks of almost almost, except for a few days here and there, right? Pure sell-off downside. It might just be time for a little bit of a relief rally, but keep in mind, we are always looking for a lower high. Then it's up to the bulls to prove to us, can they reset? If they can reset, then we will measure the weekly move up, and the bulls have a ton of work to do, guys, because we lost the weekly uptrends with this flush right here. They need to do a great job of getting this entire move back, similar to what we had back in August, right? When you flush the weekly lows, right? Weekly uptrend, flush the levels. Look how long it takes to get back a weekly uptrend. Sometimes it takes up to 2 months. So I would not say we are out of the woods just yet. We still have to be somewhat cautious surrounding our trades. But overall, if you're looking for a dollar cost average into the indexes for a long-term portfolio, you're the type of person that just dollar cost average into things with every single paycheck, now is a very decent time to be dollar cost averaging into the S&P 500 if you have a 5 to 10 year horizon. I'm not saying we're done dropping. I'm not saying we cannot drop more over the forthcoming months, but I would not buy here just because we could possibly see lower. I would just continue to do what I always do, which is DCA with every single paycheck. Really not a bad entry opportunity here. Moving on to the QQQs right now. So the Qs almost daily oversold, but not quite. Same concept here. 2 massive sweeping legs to the downside. The Qs barely closing above their 200-day EMA, not the SMA, but barely above the EMAs after we clipped into support, which is 480 down to 467, right? Now, same thing. We're looking for the expansion of the hourly uptrend. However, keep in mind that just above us right here, I'll change this one again. My apologies. We're looking into directly an area of resistance. So with the lower high right here, we need a sizable bounce and a bounce through resistance, right? At least for the next 1 to 2 days. However, if CPI is negative, that'll be your lower high, and we might just be looking for equal lows. And then it's up to the bulls to prove that they can turn around or just revisiting the lows and coming back into support. Very tough to tell with all the volatility catalysts and the capacity of the markets to change directions in just one tweet from the Trump administration. Difficult to say whether the local bottom is in or are we just maybe looking for a local high, right? And then possibly lower low, lower high into resistance, lower low into big support below us. However, very large support, 50 weekly EMA, and that would be a top to bottom drop into that level of 11 to 13%. If we just drop into it without much support from the bulls overall, we'll be hitting daily oversold conditions, and that coupled with support, guys, will probably be your local bottom. So just pay attention to the price action. Until the bulls reclaim a daily uptrend, you cannot be too greedy in your long positioning. Moving into financials right now, same concept. Daily downtrend well underway. Your lower high is all the way up here at 5260, possibly looking for a little bit of an oversold bounce. We know the 4-hour time frame coming out of oversold conditions, the 1-hour time frame as well, but we do not have an hourly trend change. So as a result, we cannot say the daily bounce is yet underway. We will see if the bulls can manifest that hourly trend change into the early hours of the Monday session. And then we'll be looking for essentially a lower high again. This overall area above us is, let me change it again, guys. I promise the rest of them are changed, especially on the big tech names. Apologies for not changing them here. But in essence, what we're looking for here is a bounce, maybe a lower high into resistance here, which is 50.77 up to about 51.5. And then thereafter, if the bulls cannot change the daily uptrend, we're just looking for a lower high and then possibly revisiting the lows into support 48.30 down to 46.78. 46.78 is exactly the 200 EMA down there and a local large support level 2 in terms of the weekly timeframes, guys. Suffice to say, we've lost now all of the momentum rolling over. It was a nice weekly uptrend attempt. Now, unfortunately, rolling over by the bears, trying to lock into support right down there. The monthly time frame as well. Still just looking at this point in time, guys, for monthly consolidation. We would not be opposed to picking up a few financials names in this area if we keep dropping. And at the end of the video, I will tell you guys which names I am most closely looking at in the overall financial sector. Moving on to healthcare right now. So healthcare also remains somewhat of a mixed bag. Some companies are doing well, some other ones are slightly lagging behind, but we have some very decent price action structure here. All things considered, we are still in the context of a daily uptrend, and we are also above our support range, which we've just recently claimed in the last week by the bulls. So the lower high is right here, 147.23. If we cannot hold this, daily downtrend will be underway, and we look to the bottom end of support, 146, 145, around that 200 EMA to support us. The weekly time frame provides more clarity. It was a weekly downtrend, nice engulfing move. This is arguably a cup and handle, which is now followed through. Also an inverse head and shoulders, which is now followed through as well. The weekly higher lows are here, 143.86. Any move lower, we're just going to be looking for a higher low for possible further trend continuation, guys. Overall, the bulls working with a lot of space, and this is one of the sectors that, just in terms of the price action, the markets actually look very healthy in terms of healthcare. Healthcare is known to be one of the sectors that is somewhat resilient in the face of economic downturn and possible market consolidation. So I'll be giving you guys a few ideas in healthcare as well at the end of the video. Moving on to semiconductors now. Semiconductors up 2.42% after a few names came alive, largely led by AVGO, but even NVIDIA coming back to the green on the Friday session, almost 2%. That being said, the damage has been done already, as you can clearly see. Clear daily downtrend. The lower high is right here, 235.30. So what we're looking for now is a bounce attempt by the bulls. If you can get as close as possible to that 235 level, it gives you an engulfing move. It allows you to recapture a lot of this lower support level, which has been tested almost to the limit by the bulls in recent price action history. We'll be looking for an engulfing move, then a reset of the daily uptrend. Only then will you know that weekly consolidation is likely finished and that your leg of weekly downtrend, because this is now a weekly downtrend, is finished. And we might just be looking to get back into this range of consolidation, which sees the bulls trapped between 233, 218 to the downside, and to the upside, 248 up to about 260 of resistance. You really want to see the bulls, guys, mount and get back this support area that we're really testing, because if you break it to the downside, guys, it becomes resistance, and watch out below. You might just be heading for the last line of defense down here, which sits at about the $200 mark on SMH. Moving on to the Russell right now. So the Russell has been one of the underperformers, but it's completely normal. When you're talking about growth concerns for the economy and growth concerns for the overall market, well, of course, the growth sector gets hit the hardest. We saw that in big tech. So obviously, if big tech is coming down 15, 20% off their highs, the Russell is going to come down a whole lot more. That being said, daily downtrend is clear as day right now. The lower highs are set 215.62. Any bounce attempt will just be looking for a lower high. Then it's up to the bulls, depending on the size of the move, to recapture the daily uptrend. And only then will we be able to say this weekly move down is done, and that we're looking possibly for the bulls to come alive and reset the weekly uptrend. Because any move right now, if you're looking at all these weekly timeframes, guys, they're all weekly downtrends at this point. You're just expecting lower highs. And if the markets continue to derail and the economy continues to somewhat flutter, you're going to be looking for lower lows here, guys, at this point. If we just continue flushing, the next big area of support is all the way down here. You can see it, guys. It's a very big one. All of these guys down there, and the 200 weekly EMA, 200 down to about 192. That is if we just use this area that we're into right now, this whole area, which is now resistance, right? If we use this area as resistance and just continue, a little bit of a bounce to the upside and then the flush, you're looking at 200 all the way down to about 195. Too much uncertainty in the economy right now for me to be making a play on the growth index overall. Are there certain names here and there that could be worth bids? Yes, and I'll give my best ones at the end of the video. But overall, I'm pretty much staying away from the Russell. I think there are far better and more clear opportunities in the market right now. And lastly, moving into the Dow Jones. The Dow Jones up about 0.52% today. I mean, not the worst day for the Dow Jones, but also not like a 2% or 1% day overall, right? We know the Dow Jones has been consolidating with the rest of the market, and currently we are under our resistance range. Now, moving into the price action, you can see a clear daily downtrend right now. The lows are set. Can we get a nice little bounce? Yes, but we're working into resistance, 43,003, all the way down to about 43,000. This area will be working as resistance, as I said. Monday, Tuesday bounce and terrible CPI, you're just probably going to revisit the lows. Monday, Tuesday bounce and very nice CPI, well, then we can talk about maybe mounting above this resistance level, creating an engulfing move and using it as support, setting the higher lows, going for the daily trend change. That would be best case scenario for the bulls, because as of right now, we have not lost the weekly lows just yet. Anything above 41.9, just looking for a weekly higher low for possibly the bulls to reclaim an area close to the all-time highs. The Dow Jones holding up better than most indexes out there. Year to date, it is still green. The SPY is not, the QQQs are not, but the Dow is still green, 0.33% year to date. So pay special attention to how we react from this zone, especially if you just start flushing into it, guys. You need to hold 41,009, which is roughly your 200 daily EMA. So that being said, that is your major sector recap. Hopefully you guys enjoyed that. The VIX also is coming down off of extended levels, right? 25 all the way to about 30 is usually when you start to see buying opportunities open up in the market. You can combine that with the fear and greed index currently reading at a 20 extreme fear, momentum extreme fear below the 125-day moving average, stock price strength, net new highs and lows on the New York Stock Exchange, extreme fear, similar to what we had back here in the month of early January overall. Stock price breadth, right? How many names are going up? How many names are going down overall? Which sectors? Everything extreme fear. We saw that on the group performance, weekly, monthly, and 3-month, right? So overall, guys, all of the fear indicators are at heightened levels. The VIX is showing that as well. If we're looking for a play to short the VIX, my favorite play to short the VIX is buying SVXY. It is a chart that is a short VIX play, but you go long on pretty much when you're trying to short the VIX. I made an absolute killing on this one back in the August session, but now it's just not high enough. If we get a nice little pop to 30, 25 to 30 is the time where I want to start building a position in SVXY, possibly just for some swing trade in shares. If we're looking at call options, guys, you got to be quite careful. I'd be going in the money, 40, 41 in the monies, maybe for May, June. You don't want to really put too little time on these contracts because you guys know, right? Playing the VIX sometimes is a little bit treacherous, but nice to see that they're coming in to the resistance range, reacting nicely, extreme fear reads, and now maybe the markets are due for a little bounce, which would bring the VIX down. But the volatility is not done, right? It can come down and just roar its ugly head back in a few weeks. But as of right now, can we be approaching a curling moment for the last 3 weeks of trade? Possibly, guys. It does look that way indeed. Moving on to yields right now. So yields as well, right? The 10 and 20 year popping up on the Friday session. We know that yields usually are inversely correlated with the indexes. So when you see green on the indexes, right, sometimes it's normal to see bonds to the downside. So you're going to see yields popping their ugly head up again on the Friday session. The reason that they're coming up pretty much is because the jobs report was just not as bad as expected, right? So still, a lot of traders and institutions not expecting the Fed to cut rates just yet until things get really bad. The 20-year yields, guys, still, unfortunately, in a weekly uptrend. This is a big engulfing move, looking for a lower high for possibly a lower low on the 10-year yield is the exact same chart. Still a weekly uptrend, big engulfing move. You need to see the rollover of the weekly downtrend. And conversely, you need to see a capture higher lows and weekly uptrend on the TLT 20-year bonds, right? If you are going long the 20-year bonds right now, the 10-year bonds, or any longer duration bonds whatsoever, essentially what you're expecting at this point in time, guys, is that the economy gets so bad, so fast that the Fed is forced to cut rates in an extremely aggressive manner, right? That is the bond trade right now, because if the economy stays good, even in spite of all these new administration policies, which are providing a lot of chaos in the markets, to quote the article from CNN, right? If the economy just stays okay, but slows down a little bit, these bonds are not going to fly. These bonds are only going to fly if the Fed is forced to cut rates extremely aggressively. If not, these bonds may just grind higher, but they will not fly as you guys are looking for with big rate cuts, right? Very, very, very complex trade with a lot of moving parts. That is everything for your overall market recap. Hopefully you guys enjoyed that. Moving into Bitcoin right now. So we know that Bitcoin Strategic Reserve was announced, but people were disappointed because there's no new money. The strategic Bitcoin reserve that was announced was saying that all crypto, which was going to be confiscated as resolutions from either crime or fraud and confiscated by the US government, was going to be added to a strategic Bitcoin reserve. That's not what crypto Twitter wanted. Crypto players wanted the government to be adding new money into Bitcoin, and that's just not the news that we got, which is why it triggered a little bit of a sell the news event. Now, Bitcoin's reacting nicely from its 200-day EMA, trying to establish some form of support around it, around that 85,000 mark. However, guys, let's not get it twisted, right? We are now under our levels of previous support, which is now unfortunately resistance for the markets. And as we can see, guys, there's just no clearly defined trend. This is just a tightening range, right? A tightening range below an area of resistance. If the markets continue to fall in the context of a weekly downtrend, you could just see lower high into lower low, and we might be able to revisit the $75,000 to $70,000 range. That would probably not happen unless we get another big leg down on the SPY and QQQs. As of right now, they're just holding. Am I buying Bitcoin right now? Not really buying it into resistance, only maybe nibbling if I have a 3 to 5 long-term time horizon for holding this asset. But any swing trades, guys, are going to encounter resistance fairly quickly. The better trade is waiting for a break above this area, retest it as support, then the stop loss goes down below there, and you're targeting the expansion of the highs. Or if you're looking to go short on Bitcoin, you're looking for the exact same thing, but in reverse, looking for a retest into this range, stop loss goes above 92.5 or 95.400, and then you're targeting downside expansion into the mid 70 levels. That's just how I see things on Bitcoin. And of course, if Bitcoin is not going to rally, guys, well, do not expect any other names on this entire altcoin list to rally either. It all starts and it all ends with Bitcoin. Moving on to our big tech name list now, shall we? And let me get a quick sip of coffee. And let's move into it, shall we? So Apple up again today, 1.59%. Well, I shouldn't say again because Apple as well has come down in the last 2 weeks, but not as much as the rest of the other big tech names, right? Mostly because Apple has not been spending a ridiculous amount of money in AI CapEx, although they could be in the next few years, $500 billion committed to AI infrastructure, essentially, which was confirmed by the Trump administration just last week. That being said, Apple remains in a daily downtrend. Nice move here, though. These are the types of moves you want to see the bulls make. You know, bottom to top move in terms of this. You put the fibs on this, right? This is a 78% retracement. That is fantastic. It gives the bulls enough space to eventually set the higher lows. That is, if they do not engulf this right away, gives them enough space to set the higher lows for a possible recapture of the daily uptrend. That being said, we never lost support either. 237 down to about 231. So Apple not looking the worst. Look at the weekly time frame, guys. Weekly was never lost. It was challenged, but it was never lost overall. Now we're looking to do a two-step weekly uptrend recovery process. Nice weekly doji candles into support once again. So can we be looking for maybe a little bit of Apple expansion with an overall bounce in the markets? Sure, maybe for a tiny little swing trade, guys. A swing trade from here with that would be an expansion into the all-time highs. I mean, can't believe I'm saying all-time highs on Apple in the context of market corrections. But overall, it is a 2-to-1 risk to reward if you're the type of person that wants to take this bet. It's technically speaking, guys, this is a very solid trade. It's just the overall markets may undo it, but it is a 2-to-1 risk to reward trade from here. 240 up to the all-time highs, 260, $20 worth of reward. And to the downside, your stop loss goes below these weekly candles, 229. So $20 to the upside, $10 to the downside. That is your essentially trade setup for a short-term trade. Long-term portfolio, guys, I mean, I'm holding some Apple shares, you know, since the entire time I've purchased them, all the way since 2018, all the way through the DCA territory, right? Would I be starting an Apple position up here at a 3.17 peg, at only a 3% free cash flow yield, at only 5% revenue growth? I think there's better deals in the market between you and I. But Apple, I mean, is the backbone of many ETFs, namely the S&P 500. So if you have the S&P 500 or the Qs, you will be exposed to Apple. And that's kind of my favorite way to be exposed to Apple, indirectly, to say the least. Moving on to AMD right now. Well, AMD coming alive and not flushing the lows, right? We had the lows set on the Tuesday session, $96, not flushing them just yet, but it's not looking the best for AMD, right? We know what the bulls are trying to go for here. They're trying to go for a daily trend change. I'll remind you the context. Context, monthly downtrend. It's called AMD. It's called Advanced Money Destroyer, right? So we know that it's just been destroying money. Weekly sweeping downtrend and daily downtrend as well. However, if you get a break of 101.58 to the upside, it would be a new daily uptrend. We are still holding the bottom end of support, which is 112 down to about 96. That last little area we popped out of, but the bulls have a lot of work to do, guys. You need a nice daily uptrend. Get me at least as high as like 110, 112. That'll be a nice weekly engulfing move. Then we can talk talk about the bulls' capacity to reset a weekly uptrend, but as of right now, they have no levels. Is it a good swing trade if you are a bullish believer in the company that they can expand some levels? We're not talking about going all the way up here super fast, right? But can they maybe reclaim 120 to about 135 and maybe the next 5, 6, 7, 8 weeks of trade if the markets are beneficial to it? Yes, absolutely. And the valuation does support that. At 108, it's about a 0.57 per peg, which is very cheap. Revenue and EPS expansion are very good as well. We're not saying it's going to take over NVIDIA as the leader in the data center applications, guys, but can they garner 5, 8, 10% market share over the next 2 years? Yes, and analysts do think so as well. The average analyst price target is about $148, and that is with good reason because they're expanding EPS and expanding revenue very, very, very rapidly, as well as profit margins and free cash flow. So this one definitely does deserve to be on a lopsided bet, right? The risk to reward now is on the favorable end of the trade, but notice I did not say that there is no risk. I'm just saying the reward versus the risk is now at a more favorable profile, especially in the lower $100 range. Moving into Amazon right now, down about 0.72%. Now, top to bottom Amazon, the weekly, guys, take a look at this, right? Amazon is now down 20%. Whenever Amazon drops 20% from its all-time highs in the context of a bullish expansion phase for the company, and it is indeed a bullish expansion phase for the company, guys. You take a look at the expansion here from EPS, right? It's not 2022. When they guided for net year-over-year EPS, and it's not 2022 when the revenue was not expanding that well. Look at the revenue and EPS for the next 4 years, right? That's a combination of all their lines of business. The e-commerce business, the cloud business, Amazon Prime Video, their advertising leg as well, the pharmacy business, which they're ramping. They have a ton of lines of businesses as well. So in the context of an expanding business profile, I'm a big fan of buying Amazon when it starts to come down 20% from its all-time highs. That being said, short-term price action definitely have to give it to the bears. Big sweeping daily downtrend. Lower highs are set at about 210 right now. So if we get a bounce, Friday bounce was nice coming into support 196 to 186. I was telling you guys, watch out for this level. It's all the previous highs right here going to be support for the bulls. 50 EMA tag, below the 200 EMA tag as well. Decent area to start to buy. And if the bulls see a nice little bounce rally into maybe 208, 210, that's an engulfing move on the daily, gives the bulls enough space to reset the daily uptrend and maybe, just maybe, start to chip away at some of the weekly damage that's been done over the last 6-7 weeks. But am I calling for a full V shape? No, the bulls have a ton of work to do, guys. It's going to be a two-step recovery process. Resistance now 224 down to about 217. Can we see something maybe like this? Yes, possibly. But can we also see something like this? Absolutely as well. So what I'm saying, if we're looking for some swing trades, maybe the target needs to be at most 215 to 220 before that big resistance hits, which gives you a very attractive risk to reward profile, guys. If we're looking for that type of trade, right? Take a look at the risk to reward profile here. If we set our stop loss below the lows of Friday, our stop loss is roughly what? $8 to the downside, and we're targeting what? To the upside about $18, $20. That's a 2.5 risk to reward trade. Not a bad trade, and I did open one of those myself as well, but we cannot get too greedy thinking Amazon's just going to blast the all-time highs. They have a ton of work to do, and any moves can just be undone by new headlines from the Trump administration, of course. Daily oversold conditions. So when we come into Confluence, daily oversold, 7 weeks plus of downside, 20% downside, 50 EMA on the weekly, big support zone. I'm a big fan of giving this one a chance. And for a long-term portfolio, I'm definitely a buyer of Amazon down here at about 200 where it is right now. The peg ratio should be a closer to about maybe a 1.45 peg, 1.5 peg. Very decent valuation to start a position on Amazon for a long-term portfolio. If you also want to own the stock for the next 3, 5, 10 years, you've been waiting for it for a while, this is a pretty decent first entry opportunity. Can we drop lower if the economy unravels or something like that? Sure, but I'll be buying the entire way down, right? And we know that maybe max drawdown for Amazon through a huge correction, what, 30, 35%, putting us back to 175, 160. Decent time to start those buys around 200, in my opinion. Moving on, not financial advice, of course, just what I'll be doing myself. Moving into Google right now, Google up about 0.88 on the day, but we know Google has suffered the same fate as Amazon, right? 5 weeks of downside pretty much ever since their earnings. Top to bottom declines before the lows of Friday were set. 19%. Same thing, guys. When you're talking about a company that's expanding fundamentals at such attractive clips, such as Google, right? Expanding average analyst price target 220 for the end of the year. Look at the EPS expansion. Look at the revenue expansion as well. Search, advertising, YouTube business, other bets business, and so many other lines of business on in between, right? Waymo, things like that, right? So guys, what I have to say about this one is it's extremely, extremely attractive in terms of valuation alone. At 180 right now, you're talking about a forward price to earnings of 20.18. Now, a few of you will make the argument that it's having a low peg because the predictability of the company has come down. Their search business is being, competed against by various large language models such as ChatGPT, Claude, Anthropic's model, several other models as well. And also they have the Department of Justice lawsuit that comes due in April when that's going to hit the press. So some of you may argue that the lower valuation is warranted. Sure, I'll give you that. It's sitting at a 1.35 peg as well, but I do think right now is a good time to give Google a chance as well. Into support 175 down to 165. This whole pocket, fantastic. 50 EMA on the weekly, daily 200-day EMA as well, but the short term, you have to give it to the bears as well. This is just one single daily leg of bounce, and the bounce so far, although it's a nice bounce, it's not adequate in terms of the fibs, only a 38.2% bounce. If the bulls were to roll over from here, the retest of the lows or lower are highly likely at this point. You need to see a bullish continuation, at least to the 618, 180, or at best, 183 to really give the bulls the best chance at resetting a beautiful daily uptrend, putting an end to this weekly consolidation phase and getting a weekly leg higher. But same as Amazon, guys, resistance above 192 to about 186. That being said, there is a trade opportunity here as well. If you're looking at the lows of the week, setting a stop loss below those at 167, you're looking at about, if you're targeting the higher end of resistance here, you're looking at about roughly, let's call it $8, $7 to the downside, and you are looking at about $12 to the upside. So it's not quite a 2-to-1 risk to reward trade, but it is up there in terms of favorable risk to reward profiles. That's everything on Google. And for a long-term portfolio, I do still think it's a buy, and I have added some shares in my own long-term portfolio for Google. Now moving on to Meta. Meta also coming down top to bottom, right? Top to bottom declines before the bottom of Friday. 18% top to bottom. However, that being said, when you look at where Meta is in the grand scheme of things, it's not sold off even close to the same tune as Amazon and Google, unfortunately, right? Moving on in, daily bears, you have to give it to them, guys. Daily downtrend is down there. Lower high is set at 658. We are currently still holding support, which is these previous resistance guys right there. Support 633 down to about 617. We have not closed below that. So the bulls still do maintain. What we need to see is an engulfing move versus your 659 lower high. If you get an engulfing move, gives the bulls the best chance of recapturing the support, setting a new daily higher low, going for a daily trend change, and maybe start embarking on this weekly bounce. The only drawback, well, the bears have taken back a chunk of this move. The weekly higher lows were 589, and we came back all the way into it. Will Meta be able to do a complete V-shape, full recovery of the weekly time frame? I have my reservations. Maybe we go into some form of extended tightening range consolidation and then get the breakout, right? Meta's done this a few times after phenomenal rallies. They go into some form of a tightening range before going a little bit higher. I would not be surprised if that's the case for Meta as well. You look on the monthly time frame, we're still far off the 12 EMA, which would be 560. Buy zone for me for swing trades and for long-term portfolio buys has to be there, guys. About 560. That would be top to bottom declines on Meta of about 22%, which is largely where you want to buy big tech, right? 20+% pullbacks, because even now, the valuation, if we were to take some off here at 625 versus 676, that's like 10% lower roughly. You'd still be sitting at a 2.1 peg. That's still a little bit expensive. So Meta's not my first choice, but if I have some long-term shares, am I nervous? Am I selling? Absolutely not. The forward prospects of the company are fantastic. It's just for swing trading purposes. I think there's some better deals in the market right now. Moving on to Microsoft right now, down about 0.9%. And Microsoft, guys, holding the lows and desperately holding the support zone. No weekly candle closes below the 391 up to about 406 weekly level support that they've bulls have been holding on the weekly time frames since the early portion of January 2024, a year's worth at this point in time, guys, right? Daily downtrend, have to give it to the bears as well. The lower highs are set pretty much right here at 405. But look, the bulls have a nice engulfing move, looking to set the higher lows, came down very close to it. Can they get the daily trend change? That would be a break of 402 to the upside. Daily uptrend would be poised to be set. And at that point, we'd be looking for also a weekly move higher against our weekly higher low, which is 417. Need to get back above this support zone, which is roughly 406. Then we can talk about the bull's ability to reset and tackle overhead resistance 425, 435. A lot of work left for the bulls, guys. A lot of work left. But if we break down further on Microsoft, where are we heading? Below support remains put at 378 down to 365. Where we are right now is a pullback of about 15, 16%. If we go even lower to that range, that'll be 19 to 22%. Both very attractive levels to be adding Microsoft to a long-term portfolio. This is a fantastic company. I know it hasn't been doing much in the last year, but the valuation is not too bad. Microsoft always does trade a little bit rich in terms of its forward valuation. Right now, the PE should be under a 30, which does not really happen on a forward basis for Microsoft. And take a look here, the forecast. All analyst price targets are above. EPS, nothing to see here, up and to the right. Traditional to Microsoft's fashion. Revenue up and to the right, really scaling fast. I really like this company, guys. One of my favorite buys in the market right now in terms of all of big tech. So that being said, we'll be adding some shares here and even some swing trades. If we take our low of 380 and we're targeting overhead resistance of 417, you have a favorable risk to reward profile, right? The stop loss is down below there. Take profit is up here. You're looking at a 2.2 risk to reward profile. Take profit 417, stop loss down there about 380. If you're looking to make a little bit of a swing trade, that is how I would price out that opportunity. Moving on to Netflix right now. Netflix down about 1.68%. Flushing, unfortunately, now through our last area of support. You can call this a fair value gap fill as well from the earnings, the gap fill from the earnings as well, coming right down into it. But now, unfortunately, this area, previous resistance, is now once again going to be resistance again, 935 down to about 900, this roughly 5% range. So that being said, who's in control? The short-term bears, of course. Lower highs are set 994. Any bounce, just looking for a lower high. Then depending on the size of the bounce, can the bulls reset and reclaim this resistance into support? Or will we just get rejected and then head a bit lower to our last line of defense down here, 830? Well, that being said, the weekly is in full consolidation mode, so you still do have an upward bias for a potential recapture. But I think at this point, guys, the V-shape, because of the size of the pullback, this is like a 70% retracement. Because of the size of it, a V-shape is probably unlikely. If you want to see the bulls really get back to all-time highs, they're probably going to have to at least two-step this entire process. The valuation for Netflix right now is not the best, sitting at about a, you just take, they're down about 10% from the last time we did this. So remove 10% from here, sitting about a 1.65, 1.7 peg. Not the best valuation, but also not super, super, super rich. But Netflix, I like targeting the 12 EMA on a pullback, which would be a pullback to 800. This would look fine on the monthly timeframes, guys. I would be targeting 800. If I had some long-term shares that I'm holding from back here, I see no reason to sell. But is it an add up here? Debatable, right? I'd be a much bigger fan of buying it at 700, which put the peg ratio down about a 1.5, $800 for an add to a long-term portfolio. And even for some swing trades, guys, I just don't think there's enough juice on this trade to really push the new all-time highs much before next quarterly earnings. I think it might get a little bit stuck considering market conditions right now. Moving on to NVIDIA right now. NVIDIA up about 1.92% today, but we know the damage has been done on NVIDIA, right? Sweeping daily downtrend overall. This is just one single leg, right? No new highs, just waterfall drop on NVIDIA. This is not the lower high. It never eclipsed the high here. That, if it eclipsed it, that would be a lower high. This is one single big move. So we're holding on to support desperately, 115 down to about 108. Culmination of the weekly levels from prior, right? If you look at this, it's the monthly, right? The monthly candles never close below here. There's a lot of price action in this range. 12 EMAs there as well. That's why I have my support area set right there. But overall, guys, it's some downtrends, right? It is looking for a monthly higher low at the end of the day, right? Higher lows are there, $90, looking for a monthly higher low for possible expansion. The weekly, though, weekly downtrend is confirmed, and even the daily downtrend is more than confirmed. However, we're not even daily oversold, right? So the bulls need to get their act together this week and need to give me a bounce at least to 125. give me a bounce to 125. That would be a 618 retracement. I'm not saying you got to go through the level, but at least you'd be getting a very healthy bounce, reset into some higher lows, and then start attacking that level. It's going to be a multi-stage recovery level for NVIDIA at this point in time, below the 200-day EMA. If the bounce is too weak and we roll over, retest the lows as highly likely. And if we just flush, guys, this whole area becomes resistance and we are going down. The next line of defense is not very close. It's $95 to about $80. These guys from back here. I'm a big fan of buying some NVIDIA here and down here as well. If we're looking for a swing trade, very simple. The stop loss goes below the low of Friday, which is an attractive level at this current stage, right? Let me see if I can just grab my trading trail right there. 107 would be the stop loss at this point, and you are targeting the resistance 124. It's a 2-to-1 risk to reward trade for a short-term swing trade between two clearly defined levels. Long-term portfolio and even long-term swing trade, big fan, guys. At 112, NVIDIA's valuation is a lot more manageable than it was prior, right? We're now down an extra, what? From the last time we did it at 131, 131 was here. We're down an additional, what? 13%. Remove 13% from this valuation right there. So let's just say 128 peg times about 0.87. You're looking at 1.1 peg for NVIDIA at 112. That is cheap, guys. Like, that is very, very, very cheap for NVIDIA, considering their next 2 to 3 years worth of growth. Moving on to Tesla right now. So Tesla, the stock that is plagued by not only some volume slowdown and sales volume from the past couple of quarters as well, but now even some superficial headlines. Well, not very superficial, because the headlines are like vandalism across Europe, some parts of Asia, Australia, even in the United States. People just really associating what Elon Musk is doing with Doge and the US government, job cuts, budget cuts, social security cuts. Well, not really social security cuts, but just trying to find fraud in social security. And it's just not doing very well for Tesla brand sentiment overall, right? So that being said, the declines on Tesla simply continue. And I was saying back here, you lose 375, you got to watch out below, because we're heading down here 300 down to 250. And we were not wrong on that analysis, guys. Really sweeping downtrend right here. The lower highs are set put at about 303. That being said, holding on desperately to the last line of defense, which currently sits at around 258. Lose 258 and you're heading one level lower, 220 all the way down to about the 200. Daily, yes, is oversold, but sometimes when sentiment and the market is really bad, it does not matter. Tesla is now down from the all-time highs, 47% overall. Can we be expecting maybe a short-term bounce here? Possibly, but any short-term bounces, unless they're a full engulfing move in relation to 303, you're just looking for lower highs, and then it's up to the bulls, right? If they can get it done, daily trend change, perfect. Then we look for a weekly bounce. But any weekly bounce, weekly downtrend, just looking for a lower high and maybe reset and try to protect this resistance or support range as it is right now. You fall through though, guys, right? If you get another leg down and fall through, you're heading right back down here. Am I trying to play Tesla at all right now? No, there's just too much volatility in the stock for me in terms of, the sentiment around the CEO and overall just the terms of what Tesla is operating in right now. Do they have a few divisions that are doing well? Yes, but the car business, guys, not only Tesla, but the auto business worldwide is just not getting it done right now. They're in a little bit of a cyclical drawdown. So I'm not looking to short-term or even long-term position in Tesla right now. I think we'll have more than enough opportunities over the course of this year with all the volatility to make that determination. But for now, I'm out. Just too many volatility catalysts for me. Moving on to Palantir right now. So Palantir, 5.53% to the upside on Friday, but doesn't look like much, right? In the context of the recent candles, Palantir top to bottom move now down, well, to the lows of Friday, 36%. Reacting nicely though, got to give it to them in the support range. Prior resistance, current support right now, that is 84 down to about $77. The bulls looking like they want to come alive here a little bit. Daily downtrend, we're trying for a little bit of a daily uptrend shift here. That would be a break and close above $90.20. If they get it done, well, we might just be looking at a new weekly leg higher. But I have my reservations, guys. When you have a top to bottom decline, right? Retracement size of 78%, it is very tough, even for Palantir, to put in a V-shaped recovery to the all-time highs. At best, the bulls might just be looking for a consolidation range between these two levels. accumulation, grow into the crazy valuation right now, and then give us a pop maybe around the next quarterly earnings, which are in the month of May, right? This would not look too crazy until the month of May, and that's largely what I'm anticipating. I would be highly surprised with all the market volatility catalysts right now. I would be highly, highly surprised if Palantir just V-shapes this and goes on to the moon as if nothing is happening otherwise in the markets right now. It desperately needed to cool down the monthly timeframes, which it has not done just yet. Monthly candle close of February was quite brutal, which is why I say the best case scenario for the bulls might just be an accumulation range as of right now. That being said, valuation now is somewhat more manageable, but still a little bit excessive. Even at $80, you're talking probably about, let's just call it probably like a 6.5 peg and a price to sales of maybe like a 50. It's still pretty crazy, right? I'm still a big fan of trimming some Palantir, running some covered calls as we move into a more accumulation phase of the business right now, possibly into next earnings. Who knows? I might be wrong. All I'm here to say is I am not yet enticed to buy this stock. Where would I be somewhat enticed to buy back into Palantir? Because I've been trimming this entire time. I trim some down here, I trim some here, I trim some here, and I even trim some in the 100s, guys. I had 1,800 shares that I got at $12, $11.80, and I've been trimming the entire way up. I'm now down to 500 shares. Where would I consider adding back? A little bit, maybe here at the $70 range, but I'm not too excited about it if you ask me, quite honestly. And now lastly, SOFI up about 1.12% on the Friday session. SOFI as well, from the highs of the year, guys, coming down 32%. So a lot of names have come down a tremendous amount in the last few weeks. Daily downtrend, definitely got to give it to the bears, of course. Sweeping downtrend, lower highs are set, 14.87, and now this whole 16 to 14 range becomes resistance. The bulls defended it for a long time. This is the previous range from 2021, 2022. Now also this range from early or late 24 into 2025 rather. Now, unfortunately, weekly downtrend, any bounce, just looking for a lower high, then it's up to the bulls. Can they get a weekly trend change underway? Well, first things first, you got to start with a daily uptrend first. That's first things first. Reacting nicely from the 200-day EMA and support 1170 down to about 950. I know it's a very wide range, but look, I mean, it's the IPO price and the highs of 2023 as well. It's a very wide range, but this is the area where I'm looking to accumulate more SOFI, guys. $12 down to 950. Give it to me down there. I'll be buying more for two purposes, for longer term swing trades, but even for some shorter term swing trades alike. That being said, shorter term swing trade, even from here, not that bad if you believe a short term bounce is coming. It's not daily oversold, but if you were to take a bounce play from the Monday session onwards, using the Friday lows from the non-farm payrolls as kind of a defined stop loss area with the 200-day EMA, you're looking at about 1184 to the downside, and upside towards resistance, you're looking at about $14. That is a 1.88 to 1, almost a 2 to 1 trade. Not the worst case for SOFI, but the best case might just be adding some shares if you have a longer term duration view on the stock, which I do as well. I am in this one and I have been writing some more short puts in this lower range to accumulate more shares. You guys know I first bought 100 shares here to make a play after earnings for some follow through. We never got it. I've been DCAing with covered calls and also some more short puts. From a 16 entry, guys, my cost on my 100 tiny shares on the trading account is down to $14. I was able to drop my share price by $2. I will continue to add in these lower ranges on SOFI. I think the valuation down here at 12 is very manageable. At 16 after earnings, we did it. The peg was a 1.12. Right now, price to sales, the company is $13.81 billion, and forward sales for 2025, I could do it right now in front of you guys, just for a little bit of a valuation recap, right? 3.22 billion for 2025, right? It's not that bad, all things considered, at a $12 range, right? So let's say 13.81 divided by, what did I say for this? I have too many numbers, guys. I forgot my number already. Let's just do it again. My bad for this one, but I'll show you guys how to do the price to sales. 3.22, yeah? I was pretty sure it was 3.22, but I just wanted to confirm. 3.22. You're looking at a 4.28 price to sales at $12.59. That's not that bad. It's really not that bad, right? Let me just redo it here. 12.59. It's going to be under a one peg at this point as well. So, you know, valuation for SoFi down here is quite manageable, all things considered. That's why I think it's still a very decent bet for a growth play. So that's probably some of the best things that I can tell you guys for all the names. I think you guys know which ones I'm keen on buying here or not. AMD, yes. Amazon, yes. Google, yes. Microsoft, yes. NVIDIA, yes. Palantir, 70, and SoFi, yes. So those are all the yeses from me in terms of all the plays that I want to buy for either a longer term portfolio or even for some swing trades. So hopefully I gave you guys all the levels on big tech. Now, before we look at my portfolio, I'll be giving you guys my buy list. So now you have my big tech and fan favorite play buy list and the areas that I'm looking to buy. Now, let's go into some fun things, which are everything outside, the ones that I don't often talk about. And I'll be giving you guys like 20, 25 trade ideas right now. There is something for everybody. So let me get a sip of coffee and we're going to jump right into it. So number one, we have a pair of consumer-facing stocks, guys. Uber looking fantastic for some expansion. Weekly higher lows are set into support 73 down to $69, looking for that weekly trend expansion. Uber with very decent valuation. We did it after earnings at 65. It was pretty much a one peg. Now $10 higher, roughly, let's call it from 65, right? From 65 up here, about 20% higher. You have to add 20% to this peg ratio. What's that going to be? Like a 1.2 peg, still very, very, very cheap for the future growth of the company. I like this one a lot. If I'm holding shares, I am holding shares, but even for a swing trade here, guys, not looking like the worst opportunity if you measure a stop loss down here at the lows and possibly targeting all-time high expansion. Similar to that, a company that Uber is invested in directly is Grab. A lot of social media buzz around this one as of recently. Decent valuation here at about $4. This one is one that I'm holding for the next 3 to 6 months, building a position here as much as I can in the $4 range, looking for some expansion. The valuation does support some expansion. Am I looking for 10, 12 bucks? No, but $6, $7, $8 over the next 3, 6, 9 months could be a possibility. Probably one of my favorite cheaper stocks out there in the market to buy. Other consumer fan favorites that I'm looking for, Elf Beauty. Elf Beauty has to be talked about. Very resilient business model, very loyal customer base, and they have one thing that a lot of other beauty companies do not have in this market environment, which is pricing power. At right now, guys, a very low price of $68, $70, you're looking at forward price to sales of 3.15. That is dirt cheap. A peg ratio of 0.87, dirt cheap. Forward price to earnings, 15.7, dirt cheap for Elf Beauty. You're talking about a bottoming out process, weekly oversold levels, daily, just coming out of daily oversold levels just now. Fantastic area for either some long-term shares or even a swing trade. Stop loss goes below 62, targeting the earnings gap right here, which is 86. Very decent 2-to-1 risk to reward trade, and even a fantastic one for a long-term portfolio add. I put 200 shares in my own long-term portfolio after earnings at 66. So you're not getting in too much later than me if you like this one. Nike as well. On its recovery story right now. We've been talking about this one for a few quarters now, trying to find the local bottoms. You are now buying Nike at 2018 prices, underway with their recovery story right now. Weekly, finally looking like a weekly engulfing move, looking for the higher lows, looking for the trend expansion out of support range. I would not be surprised if you can find this one $90 to $100 in the next 6 to 9 months. Potentially, it could be a longer than expected recovery story, but is one that I'm looking to add some shares myself specifically to. Not that bad of a either long-term hold for a significantly high-quality company. They've had their problems as of recently, but I do believe in this turnaround story. The next consumer-facing stock is going to be UPS, part of the value rotation play. You can see in the last 4 or 5 weeks since the SPY and QQQs have been selling off, UPS has been recovering after their earnings blow. They pay a 5.4% dividend for you to just sit in shares. Where are we bouncing out of, guys? Well, I'm glad you asked. The entire resistance and support range for how long? 2014 through 2020. 6 years worth of price accumulation range, bouncing out of it now. I think it's a fantastic opportunity for either some longer duration shares or maybe just some risk mitigation if there's a rotation from growth to value and you want to have a high paying, high quality dividend stock also on its cyclical bottoming out process. Could be a very attractive play. That is UPS overall. And the valuation down here, free cash flow yield is fantastic. Dividend yield is fantastic. And the price to earnings growth in the future is also quite good. Those are everything for our consumer-facing stocks. Now, in terms of semiconductor plays, there's only one other than NVIDIA that I want to bring your attention to, and that is TSM. TSM coming into support, 171 down to about 157. Fantastic range, off the all-time highs by about 22%. In the context of business expansion, it's always been a good buying opportunity to buy TSM whenever it's down 20% from the highs, into the 50 weekly EMAs, looking very good, into the 12-month EMA too, looking for a monthly higher low into support for possible further trend expansion. The guidance is absolutely fantastic, and the valuation at 177 is sitting at a 1.14 peg. That is dirt cheap, guys, and a free cash flow yield of 3.66. Very decent, and coming out of daily oversold conditions, below the 200 EMA, and as I said, into support, guys. All things lead me to believe that accumulating long-term shares for a long-term portfolio, or maybe even a swing trade using these lows and resistance highs, 2-to-1 short-term trade scenario as well, and also a great location to add some long-term shares. That is what I'll be doing for my own portfolio. That and NVIDIA, the only two ones that I'm looking at right now. Shout out for AMD, but AMD is a bit of a smaller, lesser conviction stock for me that I limit to swing trades, not so much for a long-term portfolio. Talking about the next 5 to 10 years, maybe a swing for the next 6, 9, 12, 18 months, sure, but 5-10 year portfolio, I'd rather have TSM or NVIDIA in that. Now we move into financials. There's a lot of financials that are attractive right now, but not where you think, okay? We're going to be going into some financial data companies. SPGI, one of the most resilient companies on the entire planet, coming into support, 483 down to about 460. Love, love, love this zone. Guys, this is a breakout retest area on the monthly. Previous highs from 2021, breakout, continuous retest, accumulation range for the last 6 months, I think is poised. This one is also known as somewhat value, somewhat defensive. Would not be surprised if this one can rally into the next 30, 60, 90, 3 to 6 months as well, guys. Fantastic area for some long-term shares. I've picked up some long-term shares for my portfolio as well. This one has been in my portfolio for a long time, since 2018, 2019 is the first time. When I used to work at the bank, we used to use SPGI's data all the time. That's when I was introduced to the company. I've been holding it ever since. And anytime we get some significant declines, I think it's a great time to buy, especially into a support accumulation range. Moody's Corporation, one of their competitors, similar, guys, accumulation range, 467 down to about 450. Fantastic opportunities. You will see some swing shares in my trading account that I'll show you guys in roughly the next 5 to 7 minutes. Overall, it's been accumulating here since August. I think it's a great buying opportunity. On the monthly time frame, same thing as SPGI. Accumulation looking to possibly expand in the next few days, few months as well. And daily oversold conditions. I love finding these companies that very rarely trade in daily oversold conditions, very rarely touch their 200-day EMAs. Look at SPGI. Same concept. They very, very, very rarely, in the context of business expansion, touch your 200-day EMAs or get to daily oversold. SPGI is not there yet, but Moody's definitely is, which is why it makes my list. FICO as well, reacting from the 200-day EMA, coming out of daily oversold conditions, now looking to set up a new daily uptrend possibly. This is the end of 4 brutal months of monthly consolidation after a tremendous rally, softening out the monthly RSI there as well. Could be a nice entry opportunity for a longer term swing on a fantastic company. A lot of very large funds, private equity, hedge funds have been holding this one. Tested the 200, cannot be ignored. For a swing trade, your stop goes below here, 1684, and you're targeting all the way up here, 2000, 2100. Not quite a 2-to-1 risk reward trade, but it is in my swing trading portfolio as well. That is another financial play, financial data. BlackRock, 200-day EMA touch, not quite daily oversold, but into a massive level of support, guys. Breakout monthly uptrend, breakout retest of the prior all-time highs from 2021. Have to be buying these monthly consolidation phases when BlackRock is down 13+% off their all-time highs. Fantastic era if you're looking for a little bit of a swing trade, a little bit of a solid position in a longer term portfolio or a longer duration swing trade. Not opposed to be playing BlackRock at these levels. And lastly, another player here, Brookfield. Brookfield, don't bring it up on the channel a lot because it ran a ton, way extended from the 12 EMA on the monthly, but now monthly uptrend, monthly higher lows, breakout retest from 2021, same as the other ones I showed you, into the 51 down to 45 levels. Fantastic area. And couple that with a break of the 200 daily oversold. Brookfield is never daily oversold. Very rarely you can find it daily oversold, and a crack of the 200 into support as well. I took a little position here on Brookfield for a bit of a swing trade. I think it's a fantastic company. Great time to be adding this one as well. If you have this one in a long-term portfolio or been looking for a position, fundamentally, the company is doing just fine in my opinion. Those are a few swing trades. Another shout out to a special swing trade here in the financial sector, American Express. Notice the common themes. I'm looking for 200 EMAs and daily oversold on companies that rarely touch the 200 EMAs in the context of business expansion and rarely get daily oversold as well. And I'm only showing you guys high quality companies that either are at fantastic valuations or good technical levels or both, right? No trash here pretty much, guys. I mean, some of you may not like Elf Beauty, some of you may not like Nike or UPS, but objectively speaking, the fundamentals of those companies are pretty decent and rounding the corner of a cyclical bottom, yeah? So American Express, same thing, swing trade opportunity up to the highs, 293, stop loss goes below there. That is on paper a roughly 2-to-1 risk to reward trade, as you can see right here from the profile. 2-to-1 risk to reward trade, but also if we're looking to add this one to a longer term portfolio, I wouldn't say it's cheap right now at about 312. We did it at 321. If we were to redo this peg, right? If I want to do 273 divided by, sorry, I should update all these. I might update these. That's about 85. So if we do this times the peg, right? 85 times 1.61, it's trading at like a 1.37 peg. That's not terrible for American Express. And you're finally retesting the 12-monthly EMA, guys. Not a bad area to start a position on American Express if you want to join T. Moore and Buffett in holding this substantially fantastic company for a long term. Not opposed to adding it, and even for a swing trade right now, daily oversold, 200 EMA, how much off its all-time highs? 17%. I mean, I got to buy some AXP here, and you'll see I have a little bit of a swing trade on it. Another one, MasterCard as well. Not into the 200 EMA, not oversold, but a decent pullback on the monthly and a decent pullback on the weekly. This is a breakout, guys, retest of prior resistance, which is now support. Down here, guys, 536 down to 522. If I'm looking to add to my long-term portfolio, decent area to be adding MasterCard. No, it's not cheap. And yes, you could be getting a better deal at 507. We don't know if it's going to go down there. So the best thing I can do if I'm looking to add to my long-term is add some here. And if it drops a little bit more, add some there as well. MasterCard does not give these quick little sell-offs very often. So when it does, you kind of got to take advantage. And that is just a suite of financial plays that are not banks, but are all good opportunities. Now, moving into some healthcare names. I told you guys, I'll bring you the fire this video, and I'm bringing you the fire, right? So UNH filling the gap fill right now, but still fantastic area. What are we looking at here? What? 3 years worth of support for this fantastic company with amazing fundamentals above the 200 weekly moving average. Yes, please. 487 down to 451. Fantastic area. Be building some positions if you like UNH as a company. Swing trade all the way to the highs right here, 527 to 550. Looks fairly obvious because it is, right? Fantastic support. Rarely clips into its 50 monthly moving averages, right? Those are all technical indicators I like to follow very closely. The daily MACD is also curling back around since that DOJ investigation headline. Not looking too bad. Any retest of this area would be interested for a swing trade, right? All the way up into resistance. And another healthcare play that I'm looking for, TMO, same reason. Technically very strong. 4 years, guys. 4 years of accumulation range of support, right? Talking about 520 down to 41. Fantastic opportunity here. Stop loss goes below the lows, 493, looking at $40 stop loss. How high can we possibly go? Maybe $80 to $100. That is a 2-to-1 risk to reward trade on a fantastically strong company into a big support level. One of the big healthcare players in the game right now, and wide range of accumulation at the lower end. Fantastic opportunity in my opinion. Now, value rotation. Should we be chasing names like Procter & Gamble? Should we be chasing names like Johnson & Johnson? Should we be chasing names like McDonald's? Should we be chasing names like Coca-Cola at the highs? No, I'm not a big fan of chasing, right? What I am a big fan of is finding plays in that same sector, which are relatively still sold off. And one of them is Pepsi. Fantastic company, still 22% off the all-time highs. There could be a swing trade attempt if we're targeting the highs of the most recent highs up here, 177, with a stop loss down below 142. You're looking at roughly $20 of reward for only $10 worth of risk. The bulls are trying to change around the weekly time frame. So if we get rejected here from resistance, pull back into support, 150 to 148. I might be sitting here for an order, looking for that expansion, looking for the rotation from growth to value. This could be one value name that is somewhat underappreciated, and it's paying you a 3.51% dividend yield while you wait as well. That is one of my best value plays that I can possibly find in the market right now that we are not so much chasing. Special shout out as well to MO. MO is looking very good on a longer duration time frame. Look, this is a monthly breakout, possibly retest of 55 to 52, maybe looking to follow its sector peer, Philip Morris, which has eclipsed the all-time highs as of recently. MO still has not hit its all-time highs from 2017. Could we be seeing that expansion as people rotate into value? Possibly. This one pays a 7% dividend yield. Not too bad at all. So Pepsi and MO, probably my two favorite plays when looking at value right now. Then we have some defense names. Now, not all defense names are providing good opportunities. One of them that is, though, in my opinion, is General Dynamics, looking for a monthly retest of this area right there, 260 down to about 241, coming out of it right now. Stop loss will go below here, 240, and you're charting expansion of the all-time highs. Looks like a very good trend continuation trade overall. The 3-month shows it even better. You can say, yeah, but Will, this is a monthly downtrend. Well, not so much, right? It is a loss of a monthly uptrend, but we did not ever set a monthly downtrend, right? This is just a loss of a trend. You'd need lower high into lower low. But if you look at the 3-month time frame, we never lost this, right? Looking for a 3-month higher low for possible expansion. General Dynamics, super solid company, very decent swing trade setup. Another one, Lockheed Martin. Lockheed Martin coming down 458 down about 429. The Ukraine situation is not resolved, even though America will not be funding it. LMT provides not only contracts to American defense contractors, but also European defense contractors as well. That being said, we have a nice little retest in this area. All the monthly time frame could be due for a swing trade. Stop loss goes below 421, $50 worth of stop loss, but where are we targeting, guys? All-time highs, right? $100 of expansion for maybe a $40, $50. That is a 2-to-1 risk to reward. If you want me to put it on here to just show you guys, right? This all the way up at the all-time highs, it's a 2-to-1 risk to reward. Not the worst trade in the world. 2.79% dividend. Not the worst looking stock. 3-month time frame, guys. Look, 3-month higher low, possibly for some expansion. Super quality companies, guys. But I'm not in the business of chasing Raytheon all the way up here. I'd rather find the ones that give me a better risk to reward profile on the technicals. Other names up for consideration. I told you guys I'd be bringing you the fire, right? Cybersecurity, CrowdStrike coming back down into support, 342 down to about 325. Not the worst entry for a longer term portfolio. Can they be having some short-term volatility and see their stock price decline as growth gets pulled out of the market and even come back 292, 270? Yes. That's why we have multiple ads. First ad here, second ad here as part of a long-term portfolio. Not opposed to it, guys. Not opposed to it at all. This stock is down from the tops just recently, 30% daily oversold conditions into the 200 EMA. Swing trade, glad you asked. Swing trade from here, looking at a stop loss level of 317 up to the most recent resistance highs. That is, again, a 2-to-1 risk to reward trade off of the Friday lows. Not the worst, but also not a very bad level for a long-term portfolio ad either. Or maybe you might prefer Palo Alto Networks. Glad you asked. 170 down to 160 is a long-term portfolio ad. For me, if I'm looking to add Palo Alto Networks, that is monthly consolidation range levels as well. That being said, have to be a little bit more patient with it, but this one top to bottom declines recently, 15%, not quite daily oversold, which is why I'll stay a little bit more patient for it. It could just blast off and reset. However, I'd be more interested if we come back down there, 170 to 165 on Palo Alto Networks, possibly one last sector that I'm looking at, guys, before I get into one other sector is REITs. Right? If you're looking for the collapse of the US economy and the Federal Reserve to cut rates to zero, well, a lot of people will be piling back into either dividend stocks like utilities or maybe REITs, because REITs will benefit from rates being cut extremely fast. That being said, real estate, Realty Income Corporation. This one pays a 5.5% dividend, very close to our support range. This is a roughly how long? 10-year almost range of accumulation. Now, if you throw in the dividends, this one's been going higher, right? But if you take it off, down here, 53, not a bad area. So even here at 58, guys, 58 down through these levels down here. Decent add for a long-term portfolio if you're looking for some dividend plays. Another one, same thing, triple N, another one of my favorite REITs in the entire market. So lower support range, 39 down to about 35. This one pays a 5.4% dividend overall. We are very close to it. Should we add here? Nibble a little bit here, yes. At the lower end, arguably, of a how long, guys? 10 plus year range at this point. 200 monthly moving average is right down there as well. Or even Vici. Vici is not terrible right now, but it is slightly elevated. Any pullbacks into the 31 down to $30 range for a higher low, excuse me, I would be looking to add a little bit to my portfolio if I'm looking to position into REITs. So those are all of the plays, and special shout out as well to the China plays, right? China may just be the best hedge against the US equities drawdown, because we know that when the US loses, maybe China is there to pick up the slack to go into the WHO. And look, monthly uptrend finally on KWEB. That being said, we're coming into resistance, 38 to 44. So a little bit dicey here, but if we get a pullback back down to the lower 30s, not opposed to playing this one again. I've made a very good trade on call options that we bought back here. The call options are now up 50+%. I took profit on, for all intents and purposes, 60% of my position already, but a retest down there because Baba, the lead bull in that whole sector, Baba might just be looking for some consolidation, higher low into maybe expansion. I'll be looking to pick some higher lows on the China plays, guys. I think it's a very good hedge against Train America right now, right? China has a 5% GDP growth rate, can be stimulating their economy as well. It's not for everybody, and I'm not saying that we're early to this play as well, but we're not early, but we're also not late in the context of where we can possibly rally. If it does start rallying over the next 3, 6, 9, 12 months, not that bad. That is KWEB, the ETF. I'm also looking heavily at BYDDF. This is the biggest winner if Tesla loses, in my opinion. 41 down to 40. Look, this is a breakout. Warren Buffett has this one in his portfolio. They have great cars. I was just in Asia, guys. I've been in their cars, their EVs. They're fantastic. Their interiors look like Audi or Mercedes, and their exteriors look a lot better than Tesla. All in all, they've come a long way in the last few years. Breakout of a 5-year range of accumulation. Breakout, retest, and run. Yes, please. If you get back down there, I'll be making an attempt at it. That's Baba, that's BYD, JD.com, special shout out. They have not ran at all. It's the Amazon of China. Could be looking at further upside, would be looking at a position there. And even Baidu has not ran. The valuation of Baidu is so low right now at about 90 bucks, 0.79 peg into what? 10 plus years of range bound support. Not a bad idea to position here, especially if you have a price target in the 120 to 150 range over the next 3 to 6 months. Not that bad of a trade idea in my humble opinion. And that wraps up all the trade ideas. Is that enough trade ideas for you guys? Hopefully you guys had enough trade ideas there. Value, growth, plus I gave you guys all the levels on the big tech earlier, right? Value, growth, defensive, China. I think we did a good job of recapping absolutely everything in the overall markets. And now, to end the video, let's take a look at a few of my positions, shall we? Okay, so looking at the portfolio now, guys, as I was saying, right, this is the YouTube portfolio. This is a portfolio I started with you guys in 2023 when I started the channel. Started it with about $100,000. In 2023, we made 75% during the year. 2024, we made 65% throughout the year. And now this year, we were up a whopping 16.7%, and we round-tripped largely everything in the most recent 3-4 weeks of declines. I'm always transparent with my wins and my losses. We mostly round-trip profits. We don't really have any crazy losses running in the portfolio right now. But since I was running about 2-to-1 margin, it does go down a lot quicker than anticipated. We are now roughly matched up with the Nasdaq's performance, down about 6.03% year to date. And as you guys know, on the Wednesday or Thursday update rather, I told you guys that now I am fully covered up pretty much. So the declines now, I am protected in my account. I am not looking to sacrifice all the gains in 2023 and 2024, but just always in the spirit of transparency, we reduced the account size this year because some people were saying 100K is not very relatable. So I put it down to $46,000 to start off the year, and now we're roughly under that by about 6%. Now into the position list, let's just get it together here. So in terms of the position list, guys, you'll see that, oh, unfortunately, it's not putting my call debit spreads together. Give me a quick second. All right, there we go. Now they're together. You can see it says Amazon bull call debit spread. Perfect. Over the position. So AMD, 140 calls. I got into these before Jerome Powell, December 18th. I averaged down into them recently these past 2 weeks. So now our average cost is 14.63. I will ride these. This is my bet on AMD. If I lose the entire balance, I lose the entire balance, guys. I'm willing to take that risk, but overall, the trade has not been performing adequately so far. We will see if it can make up for the losses so far in the next 10 months before this contract expires. Amazon bull call debit spread, a new position for me, started on Friday. We went with a 200 versus 205 bull calls. I was telling you I'm looking for a bounce on Amazon. This is a very tiny bounce play. I'll be looking to take maybe 30 to 50% on this contract. If we can get a nice bounce going over the week, I have until May expiry. AMZU, assigned position as well. You can see we got assigned at $42. I'm now playing defense after farming some covered calls. Let me just bring up the whole assignment tracker. It's going to make more sense, right? I have a whole assignment tracker here in my Discord. You guys can see here where I give for all the members all of the assigned prices and what our average cost is now. Our average cost is 39.01 after farming some covered calls. I am now playing defense in the money covered calls. Yes, you heard that correctly. In the money. I am capping the loss. I do not want to lose more money than that. Below, we have a $36 call. I will show you guys, I will be rotating this position on and off pretty much. We'll be rolling some covered calls. I'm not looking to close it just yet, but I do not want to lose more than that. So I'm writing below my assigned strike price to collect as much premium as I can while the stock is down. Moving on further, ARKG, you might remember that these were up a tremendous amount earlier, and ARKG has now round tripped all the gains that we had in the last few weeks, right? Down from the top to the bottom, 24%. Good thing that this is an asymmetric bet for me, and I have one call expiring June 2026 and the next one January 2027. I have a lot of time on these. I will be holding, and if push comes to shove, I may be even looking to add a little bit more contracts. So far, we did not take any profits because I'm looking for the expansion possibly into the $34, $35 range. Moving into AXP, we have an AXP. I told you guys I was interested. Daily oversold conditions, 280 to 285 bull call debit spreads. We paid 210. I'll be looking to make 30 to 50% on this contract off of a very quick bounce into our strike prices. We also did a wheel trade on Brookfield, right? I told you guys I like Brookfield. March 21st, $50 short puts. We got $1.20. That is over 1% per week on Brookfield. I'm looking to do that. We did this one on Friday towards the low of the day. I'll be holding this one. We will see if we get assigned or not. Elf Beauty, you might remember I got assigned this one at 71 a few short weeks ago. We farmed some premium on it, but now as it came down, I played defense on Thursday, and then Friday it had a 10% bounce. You can argue that I played defense a little bit too aggressively, and that might be true, but our cost basis on ELF is now 63.63 from our assignment. So even if we do get called away at 65 this week, I mean, I can always roll these calls, right? But we will still be at a profit, and that is the goal. We are playing defense in the portfolio, minimizing the losses overall. We do not want to have more drawdown than we currently have. ETHU, this is a very tiny position for me. 200 shares. We bought it when ETH was about $2,700. Now ETH is $2,100. So of course we are down about $400 on the position. The overall cost of the position though is like what? Like $900. So right now our average cost on ETHU, if you look at my assignment tracker on ETHU, our average cost is 4.53, just a little bit below this number that you see right there. I'll be maintaining the position as long as it takes to come back on Ethereum. A very small position for me. FICO, we still have the one share of FICO. As I told you guys, interesting buy. I'll be holding this one to 2200. Google, bull call debit spread as well. Started 2 weeks ago around the same levels. 180 versus 185 strikes for June. I'm looking for a quick bounce on Google, looking to make 30 to 50% on this contract as well. We also have the Google 180 long calls. These are leaps. We started these as a call debit spread. You might remember it was a leap call debit spread. Google call debit spread leap with a long side to it and a short side to it, which was a 250 strike. We closed the short side recently, pocketed $637 of profit. Now our break even on the long leap is 36.16. So you might see 42.53 here, but it's only half of the trade, right? Our average cost is 36 roughly. We're down about $1,000. We have all the way until June to allow that leap to expand. So we'll keep it in place. Google, we got assigned some shares a few weeks ago at 185. Our average cost on those Google shares right now is, let me just show it. This is why I give all these assignment trackers in my Discord, right? Google, the average cost right now is 179.06. I am also running some defensive covered calls under my assigned strike price. Why do I do that? because I want to farm premium close to the money and I want to mitigate the loss. I'm trying to reduce the loss as much as possible. Right now, let's say I get called away at 175 in the upcoming week. My loss is only going to be 179 minus 175. That's a lot better than what it was just a few days prior, of course. We'll be looking to maybe roll these covered calls forward, keep the position a little bit more, but I want to farm as much premium as humanly possible because I cannot get any premium writing calls at 185, so I'm writing closer to the money. Grab, you can see here as well, I have 200 shares. The covered calls on these just expired right now. You can see we have an average cost of 463. I'll be looking to maybe write some more covered calls around 5. So overall, guys, we're not really down too much on the position, only 200 shares. I'll be looking to add more if we come closer to 4. Intel, these are still leap call contracts for next year, December 2026. Just looking for the recovery story of Intel. We'll see what happens. KWeb, we had some fantastic profits on KWeb overall. You can see we're up now, roughly 50% plus on these contracts. I had 5 of them. I sold 3 of them at 705, locking in the gains, but I will be maintaining 2. And if we dip a little bit more, back down to $5 costs on the contracts, I might just load up the ones that I sold already. Moody's Corporation, another one that I bought on the Friday session, right around here. I'll be maintaining that one into the $500 range. Swing trade with shares. MSCI, same concept, very strong financial company overall. It's in that financial data point, right? We're looking for a test of support here, 582 to 554. Just looking for the eventual expansion of MSCI with the rest of its industry overall, targeting the mid 600s for take profit. You can see I got a lot of financial data stocks with the profits that I made, even though we round tripped a lot of gains, with those realized gains, because now a lot of the losses are unrealized losses, with the realized profits, I just bought some shares of the most solid companies in the market around the financial data space. I think that sector will do quite well. Microsoft, we got assigned 100 shares at 415, minus almost $800 in credit. Our average cost on Microsoft right now, I'll show you, after running some covered calls on the position, is $399.93. Now you will see right here that we have 385 covered calls in the money under the market. Defense. This is me saying I do not want the stock to go below 385. I do not want it. As a matter of fact, we've locked in 385 plus 11.7, meaning that if the stock closes above 385 by Friday, we would be getting out at 396.7. 396.7 minus 399.93. We are only down $323 on a $40,000 position, guys. This is what I mean when I'm saying I am playing defense. I'm not looking to give back more gains than that to the market. Sure, we haven't made any money on the stock, but at least the loss is now minimized. We are playing defense. Can I take these covered calls off? As you can see right here, can I take these covered calls off or roll them forward perhaps, or roll up to a higher strike? Yes, I have a lot of tools at my disposal to rework the position in the event that its stock moves higher, but at least we have minimized the risk to the downside on a very large position for the size of this account. Microsoft bull call debit spreads. These unfortunately will end worthless. I opened them in December in anticipation of having a bullish earnings. It did not play out. This one will be a 100% loss, unfortunately. I mean, I take some wins, but I also take some losses, right? Can't win them all, although I have a very high win rate, which I've shown you guys. I'm always transparent with my losses as well. MSFU, we have a short put here, 1 contract to the downside, 33 put. That is just a 2 times leverage play on Microsoft. 33 bucks is Microsoft at 390. I'll be able to pick up 1 contract, 100 shares there in the event it closes down below there by March 21st, and I'll just run the wheel on it. We got 86 cents in credit. Microns, these are a toss-up. I mean, we were up so much on these in September. Probably should have closed them in hindsight, but I have one good till 2025. This one not looking so hot. The next one is good for 2026, 210 calls. We'll see what happens, but I had many opportunities to take profit on Micron. I wanted to let it run with NVIDIA, with TSM. Unfortunately, the market has just not cooperated, but you can see very, very small positions for me. We also have an NVIDIA call that we took before earnings that has now lost entirely almost all its value. This was a lottery play, pure lottery play into earnings. And I even told all my members, which is why I put it there, I was saying, pure lotto. Do not do this if you don't want to lose any money. Do not do this if you don't want to lose $500, $900. I was willing to lose the entire batch because I was playing with profits at that point. Not looking the best. We have until May. We'll see if we can recapture a little value on this. I may add 1 contract to this, but if it pops up to maybe 125, 130, the next maybe 2 weeks off a market bounce, I'll probably just look to get out of this one and recapture some of the losses, because 150 by May plus 9, probably out of reach. So I'll try to minimize the loss. But overall, showing you guys the losses, right? Oxy, this is another full loss. We made roughly almost a 2x on one contract. I held the second one just to see what would happen. Unfortunately, now the position is unwound on us. SOFI as well, those 100 shares assigned on the wheel. The average cost is now down to 14. I'll show you guys the average cost as well on the SOFI trade. So the SOFI average cost, tons of premium farming, 14.19 is the average cost on those 100 shares right now. We're farming more, 11 puts to the downside, and we have 13 calls, 13.5 calls, good for Friday. We'll see what happens with those. I still have my 2 call options that we took as a lottery play as well before earnings. Not looking too hot for September, right? I kept it small, but still $1,000, right? Now, $950 loss. So all of my call options, my lottery plays have all been unwound over the last 3 weeks. That is just the nature, guys, of playing these riskier bets, right? So unfortunately forfeited some profits there. I may add to the $15 call, one more contract, but I'm just going to let these ride and we'll see what happens. If SOFI pops up, maybe I can run some poor man's covered calls against them as well. SOXL, same concept, has eroded, but our average cost on those is now about $5.15. Sorry for the very long recap, guys. After farming a ton of covered calls against the May calls, right? $5.15 is the average cost. So yes, you can see we have $2.17 of recapture value, but overall we're only down about $300. We have more covered calls here for March 21st. We'll see what happens with those. SPGI, I put my money where my mouth is, buying more SPGI as it drops. SPLG, wheel trade. This is just the SPY. SPY $68 puts. It's just a smaller ETF for the S&P 500. We'll see if I get assigned at 68 SPLG. We'll see if we get assigned here at roughly $68. It's currently now below that mark, below the $68 mark. Wouldn't be opposed to be buying the SPY here and DCAing the SPY, but that is the contract good for 2 weeks of time. We're currently underwater there. And TLT, still have that contract. We open in September. TSM bull call debit spread as well. TSM making a play to the upside, open on Friday, 180 to 185. 30-50% is the targeted profit on this one. And trade desk as well. We're down a ton on these trade desk contracts, guys. I mean, we got into trade desk at 75 after their earnings. Now our average cost is 73.31. Once again, I played defense at $60 and 627. So if we get called away at 66.26 total cost, and our average cost is 73, we'll be losing $700 on this trade. It's just, once again, before the markets crashed, trade desk crashed before the markets, and then with the markets just continued plummeting. So I'll see what I'll do with these covered calls, whether I want to take them off or keep them on. But that is just the nature sometimes of trying to buy. We were there after earnings. I wrote the 75s and now it's down an additional amount, right? It's just nonstop drop for trade desk. But I love this level in the mid 60s, mid 60 to 70s. So I'll work these covered calls as best I can. And I'll keep you updated on the running P&L, but I wouldn't be surprised if soon we might be expecting a bounce on trade desk. We'll definitely see what happens with the position overall. But that is the portfolio recap. Hopefully you guys enjoyed that. If you did, consider dropping a like on the video. Consider sharing and subscribing to the video as well. We do these videos every single Monday to Friday after the close. Sometimes I do them on Saturday like now. And lastly, if you have any questions, please leave them down below in the comment section. I'll answer all of the questions tonight on Saturday. I know there must be a ton of questions from the last few videos, so I'll take care of you guys tonight as well. And in the event you guys want to join the private Discord where I give all of these trades in real time, all of the call option trades, the call debit spreads, the wheel trades, which are usually very consistent. We have some assignments here and there. We can take some drawdowns, but in the grand scheme of the accounts, you guys have seen me run this for the past 2 years and generate very decent ROI. And when the markets come to the downside, I'm very cautious, very conservative, and cover up very quickly. I do not let the losses run to outsized levels overall and give back months and months and months of gains. So if you guys want all of these trades, call debit spreads, shares, leap call contracts, and everything in between, these are all the trades since the inception of the Discord. You can see there were far many more wins than losses. I can't guarantee future results, of course, but those are all the trades. You get access to all the live trades in the Discord. You also get access to our private morning live streams Monday through Friday for about 2 hours where I trade live and answer all your questions about your stocks, your options, your long-term portfolios, and anything in between. If you cannot attend, they are also all recorded. Keep in mind as well, guys, I also do private videos that I do not show on YouTube, defensive strategies, covered call strategies, tons of different option strategies, advanced strategies as well that I do not show on YouTube. Members have been finding tremendous value in these private videos as well. And you also get access to all my watch lists, all my options watch lists, my large account wheel watch list that I never show on YouTube, my value watch list as well, to keep in mind those rotations, and all the annotations that I ever do on stocks after earnings, all these annotations, all these support resistance boxes, right? Everything you can just copy paste with the click of a button. You get all my watch lists, all my annotations, all my technical analysis with the click of a button, guys. So all that comes included with the Discord. And I mean, not only do we do the weekly recaps, but also I never show this too. If you guys don't have time to follow my trades, I have a full position portfolio tracker that you can just easily track everything that was open today, closed, still running, and everything in between. So all that comes with the access to the Discord. If any of that interests you, the link is down below, of course. And if not, well, I guess I'll see you back on the channel, guys. Take care. Thank you so much for watching. I know it was a longer video than usual, but now that we're fully caught up with everything, my trades, the top, all the top trades we're looking for, next week, I'll just be blasting through the videos, guys, probably like 40 minutes, 45 minutes each tops, because now we're all caught up to date. So hopefully that was helpful for you guys. Take care. I'll see you tomorrow for the top 5 options video. Take care and peace.